Imagine buying a Wall Street giant like Visa, not through a broker, but directly on Solana or Ethereum. Welcome to vid42, the tokenized stock that's bridging traditional finance and crypto. Right now, vid42, trading under ticker VX, has a market cap of over $60 million. That's real value, backed by the actual price of Visa Incorporated shares. And it's only the beginning. Visa tokenized stock is a tracker certificate. Each VX token represents a claim to the market price of one Visa share. It's issued on both Ethereum as an ERC20 and on Solana as an SPL token. That means borderless, 24/7 trading. This isn't some fly-by-night project. The token is issued by a regulated entity, using legal agreements to track the stock price. Eligible investors can get exposure to Visa without leaving the crypto ecosystem. Why does this matter? Because it's a perfect example of real-world assets, RWAs, entering crypto. Tokenized stocks combine the liquidity and programmability of DeFi with the stability of blue-chip equities. The price of VX is currently around $350.57, closely tracking Visa's stock. In the last 24 hours, volume was over $73,000. That may seem small, but for a tokenized asset, it's solid liquidity. But VX isn't the only tokenized stock out there. Other companies like Tesla and Apple have similar offerings on different platforms. The market for tokenized equities is growing rapidly, with billions in potential. What makes vid42 special is its dual-chain availability. On Solana, you get near-instant, low-cost transactions. On Ethereum, you get deep liquidity and composability with DeFi apps like Uniswap. So how do you invest? You need a compatible wallet like MetaMask for Ethereum or Phantom for Solana. Then you swap for VX on a DEX. It's that simple. No bank, no broker, no middleman. But there are risks. Tokenized stocks aren't always fully backed 1:1. It relies on the issuer's trustworthiness. However, in the case of VX, it's a regulated certificate with legal recourse. The regulatory landscape is evolving. In the US, the SEC is still defining rules for tokenized securities. But globally, countries like Switzerland and Singapore. Now, let's talk about the technology. VX uses smart contracts to manage minting and burning. When you buy, the underlying share is locked by the issuer, and the token is minted. Sell? The token is burned and the share is released. This mechanism ensures the token price stays aligned with the stock price. Arbitrage bots also help keep the peg stable. It's a self-correcting system, much like a stable coin but for stocks. One major advantage: dividends. Visa pays dividends, and VX token holders are entitled to them proportionally. Distributions happen through smart contracts, automatically sent to token holders' wallets. But not all tokenized stocks offer dividends. Some are simply price trackers. Always check the prospectus. vid42's structure makes it more attractive for income-focused investors. The market cap of $60.37 million isn't huge in crypto terms, but for a single tokenized stock, it's significant. Compare it to the total tokenized asset market, which is estimated at over $10 billion. This is part of a bigger trend: tokenization of everything. Real estate, art, commodities, they're all moving on-chain. Visa's stock is just the tip of the iceberg. vid42 is a glimpse into the future of finance. Institutional interest is growing. Major banks like Goldman Sachs and JP Morgan are exploring similar products. If they launch, smaller players like vid42 might get acquired or become the standard. What's the catch? Liquidity can be thin. On some days, you might not get the best price. Also, you need to trust the issuer. Always verify the official contract address and use reputable DEXs. Security is another factor. Smart contract bugs or exploits could cause losses. The vid42 team has audited their contracts, but nothing is immutable. Always do your own research. Despite risks, the value proposition is clear: 24/7 trading, global access, and programmability. You can use VX as collateral in DeFi loans or yield farming. That's something traditional stocks can't do. Imagine combining DeFi with Visa's stability. You could earn interest on your VX while still benefiting from stock appreciation. This is the promise of tokenized equities, best of both worlds. Now, how does vid42 compare to other tokenized stocks? Tesla's equivalent has a market cap of around $20 million, Apple's around $12 million. Visa's leads the pack, showing strongest adoption. Part of vid42's success is its issuer's reputation. The company behind it has a proven track record in traditional finance. That gives investors confidence that the tokens are properly backed. The future of vid42 could include expansion to more chains like Polygon or Arbitrum, and perhaps integration with centralized exchanges for fiat on-ramps. More liquidity means more adoption. Regulatory clarity could also unlock institutional capital. If the SEC approves a framework for tokenized stocks, vid42 could see massive inflows. We're watching this space closely. For now, vid42 remains a niche but powerful tool for crypto-native investors who want exposure to Visa without leaving the ecosystem. It's a bridge asset that could become mainstream. One interesting angle, vid42 also acts as a hedge. If crypto markets crash but stocks hold, VX provides stability. Conversely, if crypto booms, you can trade VX for higher beta assets instantly. The tokenized stock space is still in its infancy. But with over $60 million in VX alone, it's clear there's demand. As more blue-chip companies join, this could become the default way to trade equities. vid42 VX represents a major step forward. It's not just a token, it's proof that traditional stocks can thrive on public blockchains. The future of investing is programmable, accessible, and 24/7. If you found this deep dive useful, smash that like button and subscribe for more tokenized asset analysis. Drop your questions in the comments, I'll answer the best ones in the next video.